Month of February showed a strong improvement in medium-sized and small companies. That's according to FBNQuest, Manufacturing Purchasing Managers Index for Nigeria. The reading improved from 44.5 index points in January to 53 index points in February. Chinwe Egwim, an economist at FBNQuest Merchant Bank, joins me now for this discussion. Thank you so much for your time, Chinwe, today. We're seeing that strong move there from 44 index points to our 53. Can you tell us what the drivers of this strong movement are?
Yeah, thanks for having me, Kenneth. So yes, the recovery to 53 from 44.5 was driven by medium-sized and small firms. Now, among their positive responses, we note one, an improvement in demand, a full-month production, that is, given that many firms resumed late in January after the holidays, and of course, an easing of COVID-related restrictions.
All right, let's look at the sub-indices and what's at play there. Can you speak to where we saw some of those improvements and why?
Of course. So 3 of the 5 sub-indices registered increases. So that was with output, new orders, and stocks of purchases. This points towards an uptick in demand when compared with the previous month. Now, higher output responses accounted for 30% of the total respondents. And this is compared to 14% that we saw in January, so it doubled. One response to our trigger question for higher output was that manufacturers of pharmaceuticals had experienced increased demand due to the current weather conditions. As for new orders, of course, the reading for this sub-index is directly correlated to consumption and demand patterns. And the stocks of purchases received a boost on the back of full resumption of operations in the month.
All right, but looking at the demand patterns, though, do you see that continuing or in the medium to near term, or are there any headwinds that you see in the near future?
Well, we have to first understand that the improvement in demand is from a low base, as we are comparing demand patterns to the previous month, when liquidity was significantly tight for consumers off the back of the spending during festivities in December. Typically, demand and supply are often slow at the beginning of the year. So when you ask medium to long term, I wouldn't say that there's going to be a significant surge in demand.
All right, but let's look at what we're seeing with access to credit. You know, you talk about affordable credit, it's still a challenge for manufacturers there. And we've just witnessed also a devaluation of the naira there to 410 naira to the dollar. Can you speak to this and how you think this is going to affect that access to affordable credit?
Okay, well, yes, access to affordable credit still poses as a challenge for manufacturers. And based on data from the National Bureau of Statistics, loans extended by deposit money banks totaled about 19.8 trillion naira in the third quarter of 2020. And the second largest recipient of loans in that quarter was the manufacturing sector, which accounted for just 15% of that total. As for exchange rates, both FX liquidity and pricing pose as additional challenges for manufacturers. According to some local manufacturing companies, FX is more accessible in the parallel market, and we have it at about 418 naira per USD. But the transaction volumes are not sufficient to cover the necessary dollar-denominated costs. Most local manufacturers are considering passing on increased production costs to consumers, but they also worry that they could lose market share to their competitors due to their relative affordability.
All right, but what are manufacturers saying about the state of insecurity? Because we've seen that heighten in recent months, though. Is it affecting their supply chains? How is it playing out for them?
Well, it is a negative, and of course will contribute to existing supply chain disruptions. Based on responses from manufacturers under our coverage, there has been no significant improvement in logistics. I believe the proportion of no-change responses accounted for as high as 85% of the total for this month of February.
All right, now let's going on to news that came in today. We saw the arrival of the AstraZeneca COVID vaccines in Abuja today, and a lot has been said about how we could see if the vaccinations help to spur that recovery in the economy, though. But I'd like you to speak to the ripple effect we could see on the manufacturing space.
Well, that's a really good question, Kenneth. The general expectation is that the wide distribution of vaccines will assist with significantly lowering the health risk, which by extension should support increased economic activity and demand. Consumption patterns are expected to improve on the back of this. So it's a positive, of course.